Hello there. We're about to tackle a question that's on the mind of so many freelancers, side hustlers, and small business owners all across the UK. And that is, when it comes to your Revolut account, is the taxman actually watching? Let's find out. So, if you're one of the millions using Revolut to handle your business income, you've probably had that little niggle of doubt. And you know what? It's a totally fair question. So today, we're going to get you the clear, no-nonsense answers you're looking for. And to make sure we get this absolutely right, all the information you're about to hear was put together with the brilliant tax experts over at My Tax Accountant. These guys are specialists in UK tax law, so you can be confident you're getting the most accurate, up-to-date info possible. Okay, let's not beat around the bush. Time to dive straight into the heart of it. The one big question everyone really wants answered. So, can HMRC see your Revolut account? The short answer is a straight-up, unequivocal yes. But, and this is a really important but, it's not what you might be thinking. This isn't about them having some kind of live feed watching every coffee you buy. That's a total myth. The reality is much more specific. It's about them having the legal power to request your data when they have a good reason, all governed by some very powerful laws. To really get our heads around this, we need to look at the legal framework that HMRC operates in. And these powers aren't just for Revolut. They apply to every single financial institution in the UK, from the big high street banks to the newest digital platforms. You know, one of the biggest tools in their arsenal is something called a Financial Institution Notice, or a FIN. This is a big deal. It came in with the Finance Act 2021, and it basically lets HMRC go straight to Revolut and demand information about a taxpayer's account. And the crucial part, they don't need your permission, and they don't need to ask a judge first. It's designed to be a fast, efficient way for them to check a tax position or collect a debt. And that Financial Institution Notice is just one piece of the puzzle. HMRC's authority is built on a whole stack of laws. You've got Schedule 36, which gives them broad powers to get data. The Criminal Finances Act gives them extra muscle in serious tax evasion cases. And then you have the money laundering regulations, which actually puts the responsibility on Revolut to flag any suspicious activity they see. And of course, there's the power of direct recovery of debts, which we'll look at right now. Now, the power to take money right out of your account sounds pretty terrifying. I get it. But it's a process with very strict rules. It's not something HMRC does lightly. For starters, the tax debt has to be over £1,000. They also have to try and contact you several times first. And importantly, there are safeguards built in. If you're considered a vulnerable customer, they have to come and see you face to face. And they are legally required to leave at least £5,000 across all your accounts. So while it's powerful, it really is a last resort. So we've covered the general powers that HMRC has for everyone. But what about Revolut specifically? Let's take a look at how Revolut, as a pretty unique financial institution, actually fits into all of this. Now, what's really interesting here is the key difference. As of early 2025, Revolut isn't a bank in the UK. It's an electronic money institution. It's still regulated by the FCA, just like a bank. But your money isn't protected by the Financial Services Compensation Scheme. Instead, it's safeguarded in a separate account. But here's the bottom line, and the most important point on this slide. Despite these technical differences, Revolut must comply with UK tax law. No exceptions. And this isn't just about the UK. There's a huge international agreement in place called the Common Reporting Standard, or CRS. Think of it as a global pact between countries to automatically share financial information to clamp down on tax evasion. Because Revolut operates in countries signed up to this, they are legally bound to share data with tax authorities all over the world, including, you guessed it, HMRC. So what data are we actually talking about? Well, under the CRS, it's pretty detailed. It's your basic identity info, name, address, tax number, date of birth. But it also includes the really important stuff. Your account balance at the end of the year, the gross amount you've made from any sales, and any other income you've received. It's basically a complete financial snapshot for the tax year. Okay, so HMRC has the power, the data sharing agreements are all in place, but it's really important to remember this. HMRC does not have the time or the resources to check every single account. Investigations aren't random, they are started by specific red flags. So let's look at what those are. This chart breaks it down perfectly. The single biggest trigger, making up a massive 40% of cases, is a simple discrepancy. That's when the figures you put on your tax return don't match the info HMRC is getting from places like Revolut. Next up are suspicious activity reports, which Revolut has to file by law. Unreported crypto gains are a huge and growing area, followed by tip-offs from third parties and just being constantly late with your filings. Let's make this feel a bit more real. Imagine a freelance graphic designer based in London. She has a great year, earns £40,000, all paid into her Revolut account. But when she does her tax return, she only declares $25,000, thinking she can save a bit on tax. Well, this is exactly the kind of red flag that HMRC's systems are built to spot instantly. Stay with me. The next point might surprise you. So what's the damage for our designer? Well, that undeclared £15,000 doesn't just go away. HMRC would come calling for the tax she owes, plus interest, and then they'd slap on some hefty penalties on top. The final bill could easily be over £9,500. Suddenly, that attempt to save a little cash has become a massive financial problem. And here's a quick pro tip for you, because this catches so many people out, especially with Revolut being so popular for crypto. If you're buying and selling crypto, any profits you make could be liable for capital gains tax. For the 2025 to 2026 tax year, the tax-free allowance is only £3,000. Anything you make over that has to be declared. We've seen the potential costs for our freelancer, but let's break down the official penalty system, because getting this wrong isn't just a slap on the wrist. The financial hit can be absolutely staggering. HMRC penalties are all based on your intent. If you just made a careless mistake, the penalty could be up to 30% of the tax owed. But if they find you deliberately underreported your income, that jumps to as much as 70%. And if you actively tried to hide it, what they call deliberate and concealed, the penalty can be up to 100% of the tax you owe. Yeah, that means you could end up paying double. Now, I know all of this might sound a bit scary, but it really doesn't have to be. The great news is that staying on the right side of HMRC is actually pretty simple if you're just organized and honest. So here is a clear 5-step plan to make sure you're doing everything by the book.
First, separate your money. Get a proper business account and don't mix your personal and work funds. It's a lifesaver. Second, keep good records of everything for at least 6 years. Third, and this is the most important one, declare all your income. Fourth, watch your turnover. If you hit £90,000 in a 12-month period, you have to register for VAT. And finally, if you realize you've made a mistake in the past, don't bury your head in the sand. Use HMRC's disclosure service. Being proactive is always your best strategy.
So, we come back to where we started. Can you use Revolut to fly under the radar and avoid paying tax? The answer, as we've seen, is a very clear no. In today's world, that's just not an option. But does managing your tax properly have to be this big, complicated nightmare? Absolutely not. Okay, before we finish up, just a quick and important legal bit. The information in this video is for general guidance only. It shouldn't be your only source for making financial decisions. Before you do anything, you really must consult with a qualified tax expert. And for that expert help, you can get in touch with the team at My Tax Accountant. Whether it's about Revolut, crypto tax, or any other UK tax question you have, they are the people to talk to. You can call them on 0208 570 8531 or drop them an email at info@mytaxaccountant.co.uk. For a more detailed read on today's topic, check out their full blog post on their website. And of course, make sure you subscribe to the My Tax Accountant YouTube channel for more guides just like this one. Thanks so much for your time.